This is the Southside School of Financial Freedom Watch List and Market Report for the week ending December 25th, 2021. Our question this week is, what is pump and dump? The answer will be provided later in the video. This week, the market ended higher. The Dow Jones Industrial Average increased 0.55% on Thursday and was up 1.65% for the week. The S&P 500 increased 0.62% on Thursday and was up 2.28% for the week. The Nasdaq increased 0.85% on Thursday and was up 3.19% for the week. Looking at the week, we can see that there were 9 up finishes versus 3 down finishes for the major indexes. On Monday, all the major indexes finished down. On Tuesday, Wednesday, and Thursday, they all finished up. The market was closed on Friday. The new unemployment claims were 205,000 versus 205,000 expected. Single-family home rents were up 10.9% in October. Home sales rose 1.9%. In November, mortgage rates decreased 0.03% to 3.27%. Shopping in stores for the final Saturday before Christmas was down 26% from pre-pandemic levels, and the Senate will vote on the president's Build Back Better bill in January, despite Senator Joe Manchin's opposition to the bill. New unemployment claims, single-family home rent increases, home sales, mortgage rate decreases, the amount of store shopping before Christmas, and the political support for the president's Build Back Better bill are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is pump and dump? Pump and dump is when interested parties who are holders of a stock spread false and or misleading information about the stock in order to create a buying frenzy that will pump up the price of the stock, and then they sell or dump the stock at the inflated price. Pump and dump is an illegal scheme to boost a stock's or securities price based on false, misleading, or greatly exaggerated statements. Pump and dump schemes usually target micro and small cap stocks. People found guilty of running pump and dump schemes are subject to heavy fines. Pump and dump schemes are increasingly found in the cryptocurrency industry. Have you ever been influenced by a pump and dump campaign? Have you ever bought a stock based on sudden and surprising good news about the stock, only to see the stock's price fall after you purchased it? Do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. You are going to have to teach yourself if you ever want to learn how to get wealth and income through the stock market. You must RSI, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor, and they taught you nothing about the financial system. You can learn how to be an investor if you simply start reading books about investing, books that you can borrow from the library or buy cheaply online. It is not difficult to learn how to be a passive investor, which is how most people should start. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is my trading watch list for the week ending December 25th, 2021. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Grayscale Bitcoin Trust, ticker symbol GBTC. It's in the third column. It increased 13.71% for the week, and it was up 5.77% on Friday. Grayscale is an investment vehicle like an ETF that enables investors to gain access and exposure to the price movement of Bitcoin without buying, storing, or safeguarding Bitcoin directly. Looking at a summary of results, you can see that Grayscale has increased just over 22% year to date. I own Grayscale shares. I do not generate cash flow from it because Grayscale does not have option contracts. I use options to generate cash flow from stocks. I use Grayscale as an indirect investment in Bitcoin. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comment section. Are you willing to share your strategy? The Southside Portfolio is not outperforming the S&P 500 index ETF SPY. The Southside Portfolio is down minus 3.79% versus 25.87% up for SPY, a difference of 29.66%. The Southside is losing to SPY by almost 30%. The primary reason the portfolio is losing is that the Southside is heavily invested in Bitcoin, and Bitcoin took a big hit earlier this year just when the portfolio started buying Bitcoin. And it has been struggling for the last couple of months. Bitcoin is in a bear market despite this week's performance. The portfolio is 81.65% in a Bitcoin trust. Equities, including puts, calls, and ETFs, make up 15.15% of the portfolio. Cash is 3.2%. The cash flow generated for this week was 0.63% of the portfolio account value. The account value changed by 11.18%. Meanwhile, the S&P 500 ETF SPY changed by 2.33%. I sold option contracts on 2 positions this week. They were both calls that ranged from $219.40 to $386.05. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. Check out past videos for other questions of the week. They are listed in the description section. Please like, share, and subscribe.